Question 1. Scenario-based question. John is an insurance adjuster who receives a homeowner's insurance claim for a roof damage during a hailstorm. The insured property is located in a state that experiences severe weather patterns, including frequent hailstorms. During the investigation, John finds that the roof was previously patched multiple times and some areas of the roof show signs of wear and tear that predate the storm. The insured insists that the damage was entirely caused by the recent hailstorm. What should John consider when determining the extent of the loss? A. John should deny the claim entirely since the roof had previous patches regardless of the storm. B. John should only cover the damage directly caused by the hailstorm, excluding any wear and tear prior to the storm. C. John should approve full payment for the roof replacement, assuming the hailstorm caused all the damage. D. John should consider applying depreciation to the loss to account for wear and tear before the hailstorm. Answer. B. John should only cover the damage directly caused by the hailstorm, excluding any wear and tear prior to the storm. Explanation. In claims adjustment, it's essential to differentiate between damage caused by covered perils and damage due to normal wear and tear. Under most homeowners' policies, only the damage caused by the hailstorm would be covered and any pre-existing wear and tear would be excluded. Depreciation should also be considered to reduce the amount paid on older damage, but only if applicable to the portion of damage from the storm. Therefore, the correct response is that John should cover only the hailstorm damage and not any damage pre-existing due to wear and tear. This aligns with the principle of indemnity, which aims to restore the policyholder to their pre-loss condition, excluding pre-existing conditions that would not be covered by the policy. Question 2. Conceptual question. Which of the following is an example of a potential violation of the Virginia Insurance Code related to the handling of claims? A. An adjuster refuses to settle a claim based on policy exclusions without providing the policyholder with written documentation. B. An adjuster delays claim settlement until after the policyholder has settled their claim with a third party. C. An adjuster provides a claim settlement offer based on the estimated damages without considering all available evidence. D. An adjuster suggests that a policyholder should file a claim under their homeowner's insurance policy for an event that is likely excluded. Answer. A. An adjuster refuses to settle a claim based on policy exclusions without providing the policyholder with written documentation. Explanation. Under the Virginia Insurance Code, claims adjusters are required to act in good faith and provide clear communication with policyholders. If an adjuster refuses to settle a claim based on policy exclusions, they must provide written documentation to the policyholder explaining the reason for the denial. Failing to do so violates the ethical and legal responsibilities set out by the Virginia Bureau of Insurance, which mandates that policyholders be informed of their rights and the reasons for any claims denial. This ensures transparency and helps prevent unfair claims settlement practices. Violations related to misleading or obstructing claimants can lead to regulatory penalties and legal consequences. Question 3. Conceptual question. Which of the following methods is used to determine the value of personal property under a homeowner's insurance policy when a claim is filed? A. Actual cash value, CV. B. Replacement cost value, CV. C. Market value. D. Depreciated value. Answer. B. Replacement cost value, a CV. Explanation. Replacement cost value, a CV, is the method used to determine the value of personal property under a homeowner's insurance policy. RCV covers the cost to replace the damaged or destroyed property with new items of similar kind and quality without subtracting for depreciation. This is a more policyholder-friendly approach compared to actual cash value SEV, which accounts for depreciation and pays the policyholder less than the full replacement cost. Under a CV, the insurer would pay the value of the item after depreciation, reducing the amount the insured receives. However, RCV provides a higher payout, ensuring the policyholder can replace their property with new items, which is typically a more equitable solution for the insured. Question 4. Scenario-based question. Anna, a claims adjuster, is handling a liability claim for a slip-and-fall accident in a supermarket. The incident occurred when a customer, Mr. Smith, slipped on a spilled liquid in an aisle. The store has security footage showing Mr. Smith walking in the aisle for several minutes without any visible indication of the spill. Upon reviewing the store's maintenance records, Anna finds that the store had failed to clean up a spill that occurred earlier in the day. How should Anna proceed with the investigation of the claim? A. Anna should immediately deny the claim because Mr. Smith did not notice the spill right away. B. Anna should accept the claim as the store's failure to clean up the spill constitutes negligence. C. Anna should recommend a settlement offer based on the assumption that the store is at fault without further investigation. D. Owner should recommend mediation between Mr. Smith and the store to settle the claim, as it is likely a case of contributory negligence. Answer: B. Owner should accept the claim, as the store's failure to clean up the spill constitutes negligence. Explanation: in liability claims, the concept of negligence is central. The store's failure to clean up the spill in a timely manner constitutes negligence, as it had a duty to ensure the safety of customers. Even though Mr. Smith did not immediately notice the spill, the store's lack of maintenance and failure to address the hazardous condition leads to its responsibility for the accident. Owner's role is to investigate the facts thoroughly, and in this case, the store's negligence is clear. The other options do not adequately address the key concept of negligence and the responsibility of the business for maintaining a safe environment. Question 5. Conceptual question. Which of the following is a key factor in determining whether a claim under a property insurance policy is considered a total loss? A. The amount of the deductible in the policy. B. The actual cash value of the property immediately before the loss. C. The extent of the damage to the property relative to its replacement cost. D. The potential for the property to be repaired or replaced. Answer: C. The extent of the damage to the property relative to its replacement cost. Explanation: a total loss in property insurance is typically determined by the extent of damage relative to the property's replacement cost or value. If the damage is so extensive that repairing the property would cost close to or exceed the property's value, it may be classified as a total loss. The deductible is irrelevant in determining whether the loss is total or partial, though it impacts the payout. The ACV of the property helps to assess the payout, but the critical determinant is how the damage compares to the replacement cost. If the repair costs are close to or exceed the property's replacement cost, it is considered a total loss. Question 6. Conceptual question. Which of the following best describes the role of subrogation in insurance claims? A. Subrogation allows the insurer to transfer a claim to another party. B. Subrogation enables an insurer to seek recovery from a third party responsible for the loss after paying the claim. C. Subrogation is a provision that allows the insurer to pay the insured directly without investigating the claim. D. Subrogation limits the insurer's ability to recover costs for any claims involving fraud. Answer: B. Subrogation enables an insurer to seek recovery from a third party responsible for loss after paying the claim. Explanation: subrogation is a legal principle that allows an insurer to recover the amount of a claim paid to the insured from a third party that is found to be responsible for the loss. This typically occurs in liability insurance, where the insurer pays the insured for a covered loss and then seeks reimbursement from the party that caused the damage. This helps prevent the insurer from incurring unnecessary costs and ensures that the responsible party ultimately bears the financial responsibility for the loss. Options A, C, and D do not accurately describe the concept or function of subrogation. Question 7. Conceptual question. Which of the following actions could be considered an unfair claims settlement practice under Virginia law? A. Settling a claim for less than the policyholder's expectation but within policy limits. B. Delaying the settlement of a claim without providing a reasonable explanation to the insured. C. Offering a settlement to the insured without a formal claim investigation. D. Rejecting a claim outright without any investigation or communication with the policyholder. Answer: B. Delaying the settlement of a claim without providing a reasonable explanation to the insured. Explanation: Virginia law, like most states, regulates the fair handling of claims to prevent insurers from taking unfair advantage of policyholders. Unfair claims settlement practices include delaying the settlement of a claim without a valid reason or providing no explanation for the delay. Insurers are expected to act in good faith and make timely decisions regarding claims. Failing to communicate the status of a claim or unjustly delaying payments is considered an unfair practice. Options A, C, and D may involve poor customer service or questionable practices, but option B specifically addresses unfair settlement practices under Virginia's regulations. Question 8. Conceptual question. Which of the following best describes the actual cash value received in property insurance? A. ACV is the amount it would cost to replace the property with new materials without depreciation. B. ACV is the original purchase price of the property at the time it was insured. C. ACV is the cost to repair the property considering only material depreciation. D. ACV is the replacement cost of the property minus depreciation at the time of the claim. Answer: D. ACV is the replacement cost of the property minus depreciation at the time of the claim. Explanation. Actual cash value (ACV) is defined as the cost to replace property with a similar item of like kind and quality minus depreciation. It represents the current value of the property at the time of loss, considering its age and wear. The ACV method is used to determine claim payments for property damage when a policyholder has not elected a replacement cost policy. This ensures that the payout reflects the devaluation of the property due to usage and age. Options A, B, and C describe variations of replacement cost or repair costs but do not fully capture the definition of ACV as it applies to the insurance industry. Question 9. Scenario-based question. Rachel is handling a third-party liability claim for an automobile accident. The insured, Mr. Brown, was driving when he collided with another vehicle, injuring the driver of the other car. Rachel investigates and discovers that Mr. Brown was speeding and ran a red light just before the collision. However, the other driver, Mr. Green, had a pre-existing medical condition that caused his injuries to be more severe than what would normally be expected. How should Rachel handle the assessment of liability and damages? Rachel should deny the claim because Mr. Green's pre-existing condition was a significant factor. B. Rachel should accept liability for Mr. Brown, but limit the payout due to Mr. Green's pre-existing condition. C. Rachel should determine that Mr. Brown is entirely liable for the accident without considering Mr. Green's pre-existing condition. D. Rachel should apply the eggshell plaintiff rule and compensate Mr. Green for his injuries in full, even though they were exacerbated by his condition. Answer. D. Rachel should apply the eggshell plaintiff rule and compensate Mr. Green for his injuries in full, even though they were exacerbated by his condition. Explanation. The eggshell plaintiff rule in tort law states that a defendant is fully responsible for the harm caused to the plaintiff, even if the plaintiff's injuries are more severe than would be expected due to a pre-existing condition. In this scenario, Mr. Brown is clearly at fault for causing the accident, and the extent of Mr. Green's injuries, while aggravated by a pre-existing medical condition, should be fully compensated. The insurance company must pay for the injuries as they occur, regardless of any pre-existing conditions that may exacerbate the damages. This principle applies in personal injury claims, ensuring that the defendant is liable for the full extent of harm caused. Question 10. Conceptual question. In workers' compensation insurance, which of the following is typically not covered under the policy? A. Medical treatment for injuries sustained on the job. B. Temporary disability payments while the employee recovers. C. Permanent disability benefits for a severe work-related injury. D. Injury sustained during a personal errand while on a lunch break away from the worksite. Answer. D. Injury sustained during a personal errand while on a lunch break away from the worksite. Explanation. Workers' compensation insurance generally covers injuries that occur within the scope of employment. This includes medical treatment, temporary disability benefits, and permanent disability payments for work-related injuries. However, injuries sustained during personal activities, such as running errands during a lunch break away from the workplace, are typically excluded from coverage. This exclusion is based on the principle that workers' compensation is designed to cover injuries that happen while the employee is engaged in tasks related to their work duties or the employer's business operations. Question 11. Scenario-based question. John, an insured property owner, experiences damage to his house due to a fallen tree. The tree was on his neighbor's property, but it fell during a storm and there were no prior indications of the tree being unhealthy. John's insurance policy covers damage to his property, but his neighbor's homeowner's insurance policy does not. What is the best way to handle the claim? A. John's insurer should pay for the damage, and John can sue his neighbor for the cost. B. John should file a claim with his own insurance as the damage was caused by a natural event. C. John should attempt to get the neighbor's insurer to cover the damage, even though the neighbor has no coverage. D. John should pay for the repairs out of pocket, as the neighbor's insurer is responsible for the damage. Answer. B. John should file a claim with his own insurance as the damage was caused by a natural event. Explanation. In this case, the tree fell due to a natural storm and there was no indication of negligence on the part of the neighbor. John's property insurance should cover the damage under the policy's coverage for falling objects or storm-related damage. John's insurer will handle the claim, and his neighbor's lack of coverage is not relevant unless negligence can be proven. John could attempt to recover costs through legal action, but his own policy is the appropriate source for claim payment. Question 12. Conceptual question. What is the primary purpose of a rider or endorsement in an insurance policy? A. To cancel the existing insurance policy in exchange for a new one. B. To add or modify specific coverages to an existing insurance policy. C. To reduce the premium amount for a policyholder. D. To reinstate coverage for a period after it has lapsed. Answer: B. To add or modify specific coverages to an existing insurance policy. Explanation: a rider or endorsement is a document that modifies or adds specific terms, coverages, or conditions to an existing insurance policy. It can increase or decrease the coverage limits or change the exclusions. Riders are commonly used to add specific coverage that is not included in the base policy, such as coverage for jewelry or high-value items in homeowners insurance. Question 13. Conceptual question. Which of the following is not typically covered under a standard homeowners insurance policy? A. Fire damage to the house. B. Theft of personal property. C. Damage caused by a flood. D. Liability for guest injuries on the property. Answer: C. Damage caused by a flood. Explanation: flood damage is typically excluded from standard homeowners insurance policies. Flood insurance is usually purchased separately through the National Flood Insurance Program and FIP or private insurers. Homeowners insurance typically covers damage from fire, theft, and liability for guest injuries, but water damage from flooding is not included in the standard policy. Question 14. Scenario-based question. Sarah is a policyholder under an auto insurance policy with liability coverage. While driving, she causes an accident that injures another driver, and the other driver sues her for medical expenses and lost wages. What will Sarah's insurance typically cover? A. Is Sarah's own medical expenses and vehicle repair costs. B. Only the other driver's medical expenses, not lost wages. C. Sarah's legal fees and any damages up to the liability limit. D. Sarah's medical expenses, repair costs, and the other driver's property damage. Answer: C. Sarah's legal fees and any damages up to the liability limit. Explanation: liability insurance is designed to cover damages the insured causes to others. This includes medical expenses, property damage, and legal fees up to the policy limit. It will not cover Sarah's own medical expenses or vehicle repairs, which would be covered under other types of coverage like personal injury protection, PIP, or collision insurance. The other driver's lost wages may also be included in the damages, as liability insurance covers bodily injury claims from accidents the insured causes. Question 15. Conceptual question. Which of the following is a key distinction between replacement cost and actual cash value perceived in property insurance? A. Replacement cost covers the cost of replacing property without accounting for depreciation. B. Replacement cost covers only the amount of money the insured originally paid for the property. C. ACV provides more compensation than replacement cost in most cases. D. ACV covers only the depreciation of the damaged property. And so a replacement cost covers the cost of replacing property without accounting for depreciation. Explanation: the main difference between replacement cost and actual cash value (ACV) is that replacement cost covers the full cost to replace the property with a new item of like kind and quality without factoring in depreciation. ACV, on the other hand, is the replacement cost minus depreciation, reflecting the current value of the property after considering its age and condition. Therefore, replacement cost is typically more beneficial to the policyholder in the event of a claim. Question 16. Scenario-based question. Julie owns a business and is concerned about potential loss of income due to a fire damaging her storefront. She has purchased business interruption insurance, which includes coverage for lost profits. The fire occurred and the business had to shut down for 3 months to rebuild. What should Julie expect from her business interruption insurance? A. A payout for the full rebuilding cost of the store. B. Compensation for the lost income during the 3-month closure, but not for the rebuilding costs. C. A payment for the business interruption coverage, plus the store's value as it was before the fire. D. Reimbursement for the store's inventory, plus an additional payout for any profits lost during the rebuild. Answer: B. Compensation for the lost income during the 3-month closure, but not for the rebuilding costs. Explanation: business interruption insurance is designed to cover the lost income a business experiences while it is temporarily shut down due to a covered event, such as a fire. This coverage typically compensates for lost revenue during the period of the business closure, but it does not cover the actual cost of rebuilding the property, which is typically covered under property insurance. Question 17. Conceptual question. What is the primary purpose of an exclusion in an insurance policy? A. To limit the amount of compensation paid for a claim. B. To outline the specific coverage limits for a policyholder. C. To specify certain events or circumstances that are not covered by the policy. D. To provide coverage for events or circumstances that were not included in the original policy. Answer: C. To specify certain events or circumstances that are not covered by the policy. Explanation: exclusions in an insurance policy specify the events or circumstances that are not covered by the policy. For example, most standard homeowners policies exclude damage from floods or earthquakes. These exclusions help define the scope of coverage and make it clear which risks are not the insurer's responsibility. They are important for setting boundaries on what the policy covers. Question 18, scenario-based question. Kevin is an employee covered by workers' compensation insurance. While operating machinery at work, he injures his hand, requiring surgery and several months of rehabilitation. However, Kevin is also found to have been ignoring safety protocols, which contributed to the severity of his injury. How would workers' compensation insurance typically handle Kevin's case? A. Kevin's claim will be denied entirely due to his negligence. B. Kevin will receive benefits, but the payout may be reduced due to his contributory negligence. C. Kevin will receive full benefits as workers' compensation provides coverage regardless of negligence. D. Kevin's employer is liable for the full cost of his medical bills, separate from the workers' compensation insurance. Answer: C. Kevin will receive full benefits, as workers' compensation provides coverage regardless of negligence. Explanation: in workers' compensation cases, the primary principle is that employees are entitled to compensation for work-related injuries, regardless of fault or negligence. This no-fault system is designed to provide medical benefits, wage replacement, and rehabilitation costs. Kevin's failure to follow safety protocols may be a factor in determining the severity of his injury, but it does not affect his entitlement to workers' compensation benefits. Question 19. Conceptual question. Which of the following is typically considered a peril covered by a homeowner's insurance policy? A. Wear and tear due to aging. B. Damage caused by a power outage. C. Fire and smoke damage. D. Intentional damage caused by the insured. Answer: C. Fire and smoke damage. Explanation: in homeowners insurance, peril refers to a specific risk or cause of loss that is covered by the policy. Common perils include fire, theft, vandalism, and storms. Damage caused by wear and tear, power outages, or intentional actions by the insured are generally not covered. Fire and smoke damage is a standard peril included in most homeowners policies. Question 20. Scenario-based question. Lucas is the policyholder of an auto insurance policy with both comprehensive and collision coverage. While parked at a shopping mall, another driver crashes into Lucas's car, causing significant damage. What coverage will pay for the repairs to Lucas's car? A. Comprehensive coverage, since the damage occurred while the car was parked. B. Collision coverage, as the damage was caused by a collision with another vehicle. C. Both comprehensive and collision coverage, depending on the cause of the accident. D. The other driver's liability insurance, since they caused the accident. Answer: B. Collision coverage, as the damage was caused by a collision with another vehicle. Explanation: collision coverage applies to damages resulting from a collision with another vehicle, whether it occurs while driving or when parked. In this case, because the damage to Lucas's car was caused by another driver crashing into it, collision coverage will pay for the repairs. Comprehensive coverage typically covers non-collision events, such as vandalism or theft. The other driver's liability insurance would apply if they were found at fault and the accident resulted in property damage. Question 21. Scenario-based question. Marie, a business owner, has an employee who injures their back while lifting heavy boxes. The employee is unable to work for 2 months and needs medical treatment. What type of insurance is most likely to cover the employee's medical costs and lost wages? A. General liability insurance. B. Workers' compensation insurance. C. Business interruption insurance. D. Commercial auto insurance. Answer: B. Workers' compensation insurance. Explanation: workers' compensation insurance is designed to cover medical costs, rehabilitation, and lost wages for employees who are injured on the job. This type of insurance is typically required by law for most businesses with employees. General liability insurance covers third-party injuries or property damage, while business interruption insurance covers loss of income due to business closures. Question 22. Conceptual question. Which of the following is an example of a moral hazard in insurance? A. An insured party intentionally causes a loss to their property. B. An insured party forgets to lock their car, resulting in theft. C. An insured party experiences a car accident due to poor weather conditions. D. An insured party's property value decreases due to market conditions. Answer A. An insured party intentionally causes a loss to their property. Explanation: moral hazard refers to situations where an individual takes on more risk because they know they are protected by insurance. Intentional damage, such as arson or causing a loss, is an example of moral hazard, as the insured may be more likely to cause the loss due to the safety net of their insurance policy. Question 23. Scenario-based question. Tom's house is severely damaged by a fire caused by an electrical malfunction. His homeowner's insurance includes coverage for fire damage. However, his insurance policy has a $500 deductible. If the total cost to repair the damage is $10,000, how much will Tom's insurance pay for the repairs? A. $10,000. B. $9,500. C. $500. D. $9,000. Answer: B. $9,500. Explanation: Tom's policy includes a $500 deductible, which means he is responsible for the first $500 of the repair costs. The insurance company will pay for the remaining $9,500 of the $10,000 repair cost. The deductible is subtracted from the total claim amount before the insurer pays. Question 24. Conceptual question. Which of the following is considered a moral hazard that an insurer may attempt to reduce through careful underwriting and monitoring? A. A person who buys a health insurance policy only after becoming sick. B. A person who engages in risky activities, such as extreme sports, after purchasing life insurance. C. A person who mistakenly leaves their car keys in the ignition, leading to theft. D. A person who refuses to file a claim despite having coverage for the loss. Answer: B. A person who engages in risky activities such as extreme sports after purchasing life insurance. Explanation: moral hazard occurs when an insured person takes greater risks because they know they are covered by insurance. In the case of life insurance, if someone engages in more dangerous activities after purchasing the policy, they might assume that any injury or death will be covered by insurance, which is an example of moral hazard. Insurers try to mitigate this risk through underwriting and exclusions for high-risk activities. Question 25. Scenario-based question. Sarah is involved in a car accident and submits a claim to her auto insurer. However, after investigation, the insurance company determines that Sarah was driving under the influence of alcohol at the time of the accident. What is likely to happen next? A. Sarah's claim will be fully paid because auto insurance covers all accidents. B. Sarah's insurance policy will cover the damages, but she will face a higher premium. C. Sarah's claim will likely be denied and she may face legal consequences. D. Sarah will only be covered for the damage to her vehicle, not any injuries. Answer: C. Sarah's claim will likely be denied and she may face legal consequences. Explanation: most auto insurance policies include an exclusion for accidents caused by driving under the influence of alcohol or drugs. If Sarah is found to have been intoxicated at the time of the accident, her claim may be denied. Additionally, driving under the influence is a legal violation that could lead to criminal penalties such as fines, license suspension, or even jail time. Question 26. Conceptual question. Which type of insurance would typically cover damage to a business building caused by a fire? A. General liability insurance. B. Business interruption insurance. C. Property insurance. D. Commercial auto insurance. Answer: C. Property insurance. Explanation: property insurance is designed to cover physical damage to a business's building and its contents due to events like fire, theft, or vandalism. General liability insurance covers third-party claims for injury or property damage, while business interruption insurance covers lost income during a disruption to business operations. Commercial auto insurance covers vehicles used for business purposes. Question 27. Scenario-based question. Emily's car is stolen. She has comprehensive auto insurance, which covers theft. The car is recovered a month later, but is in worse condition than when it was stolen, with significant damage. How will Emily's insurance handle the claim? A. Emily will receive a payout for the full value of the car when it was stolen. B. Emily will only receive compensation for the damage done after the car was stolen. C. Emily will receive compensation for the car's original value, less depreciation. D. Emily will be reimbursed for the replacement cost of the car minus her deductible. Answer: D. Emily will be reimbursed for the replacement cost of the car minus her deductible. Explanation: with comprehensive auto insurance, Emily will typically receive compensation for the replacement cost of the car minus any deductible. If the car is recovered with damage, the insurer will assess the damage and provide a payout based on the repair costs or replacement value. The deductible will still apply. Question 28. Conceptual question. Which of the following is a common exclusion in a typical homeowner's insurance policy? A. Theft of personal property. B. Fire damage to the home. C. Damage caused by flooding. D. Liability for injuries sustained on the property. Answer: C. Damage caused by flooding. Explanation: flood damage is commonly excluded from standard homeowners insurance policies. Homeowners would need to purchase separate flood insurance to cover damages caused by floods. Fire damage, theft, and liability for injuries sustained on the property are generally covered under standard homeowners policies. Question 29. Scenario-based question. Jake's business property was damaged in a hurricane. His business interruption insurance policy provides coverage for lost income during a business closure. A hurricane caused his business to shut down for 2 weeks. How much will Jake's business interruption insurance cover? A. It will cover all repairs needed to reopen the business. B. It will cover the revenue the business would have earned during the closure. C. It will cover the full cost of rebuilding the damaged property. D. It will cover the costs of repairing the machinery and equipment. Answer: B. It will cover the revenue the business would have earned during the closure. Explanation: business interruption insurance is designed to cover lost income when a business has to temporarily close due to a covered event, such as a hurricane. It compensates for the income the business would have earned during the closure, allowing the business owner to maintain operations even during the recovery period. It does not cover physical repairs to the building or machinery, which would be covered by property insurance. Question 30. Conceptual question. What is the primary purpose of an insurance or excess or umbrella policy? A. To cover the insured's own medical bills after an accident. B. To increase the coverage limits beyond the standard policy for broader protection. C. To lower the insured's premiums by reducing coverage amounts. D. To cover the costs of personal property replacement after a loss. Answer: B. To increase the coverage limits beyond the standard policy for broader protection. Explanation: an umbrella insurance policy is designed to provide additional coverage above and beyond the limits of existing policies, such as auto or homeowners insurance. It helps protect the insured from large claims or lawsuits that may exceed the limits of standard policies. It is often used to provide extra liability coverage for accidents, injuries, or property damage.